Hello, everyone. Welcome back to the Midnight Markets podcast. My name is Sofia Cruz, your host, and here we break down trending financial topics with the insights from the sharpest minds in the industry. Today, we have the one and only Joshua Hanft.
Hi.
Had him before, but you can still introduce yourself to people who don't know you.
Okay, my name is Joshua. I was here, day one, obviously. The first episode was me because it just made sense. Before we got any guests, I should do the first episode. No, I'm the president. I'm the supreme leader of the Stock and Portfolio Management Club.
That's how I call you.
Yeah, that's what I go by. It's my official title that you must refer to me as. Mm-hmm. So no, I've been behind the scenes this whole time, operating everything. It's so much fun. Today's been fun. I've been doing the podcast. We got a fun meeting later today. I've been managing a professional event that we have on the 14th, talking about getting our merch delivered. I'm so hyped for our merch. I'm gonna wear an SPMC hat every day.
Yes.
It's gonna be so much fun. So yeah, that's who I am. I'll be interning next summer at HSBC in their Globals and Security Summer Internship Program. I speak fast too, so I apologize in advance.
But that's what we need for today, though. That's what we need. Yeah, because we need to analyze what's actually going on with the S&P 500, oil, and gold.
The markets.
Crazy.
Okay, the markets, they don't help me calm down and relax. All the time, they're up, 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 up. I wake up yesterday morning, I see the market correct from being down 5% to up a little bit. I wake up late too because my sleep schedule is terrible.
But I'd be texting Josh like at 7 a.m. and that's Josh there.
I respond immediately to everything because the market's volatility that gives me more energy. I was hyped all freaking day. I was going. I did not stop at all because I'm looking at the markets and I'm like, the markets are moving like this. I gotta move like this too. No, I got a lot of energy.
Yes, because I wanted to touch on what's actually going on with the S&P 500. I mean, you've been keeping an eye on it, right?
Yeah, no, the S&P it's been fun. The VIX is above 50. What the heck? Above 50. It was at I looked this morning. The peak was 94 in 08. It hit, for some reason, 60 to 70 on August 5th due to the whole yen carry trade fiasco. It spiked during COVID, obviously. That made sense. COVID 2008. But dude, this is the second time in the last year the VIX spiked out of nowhere. It's above 50. Look at the put call ratio. It's just a vertical line straight up. And I'm waiting I checked this morning, right? What it was from yesterday. And I'm like, oh yeah, it's gonna go back down. It's gonna be invert. Dude, things even higher today than it was on Friday. Or what day is it? Today's Tuesday?
Tuesday,
higher than on Monday. The thing is just going up and up and up. So, what's wrong with the S&P? A lot of volatility. Over a 50% price move is priced in the thingamajig, the S&P, in the next year. 50%.
50,
yeah. No, I mean, it's the tariff stuff, too. Am I the only one who's thinking, didn't Trump campaign on this? Didn't we all know Trump was going to launch these tariffs? And the S&P went up. It went up after he got elected. But I'm like, we all knew these tariffs were coming. Oh, and then Bill Ackman today. I think Bill Ackman's a fun guy.
Why?
He's interesting. He's on these podcasts talking about his politics. Mm-hmm. I'm not going to comment on his politics in favor or against it or anything about Bill Ackman as a person. I think I'm very interested in him. I think it's very interesting, his opinions. Mm-hmm. I don't want to get political or anything like that. No. But no, I saw a headline. I got to look into this too. But I think I saw on Bloomberg that he was super pro-Trump, super MAGA, and now these tariffs are coming. And he's like, yeah, actually, he's backing down a little bit.
Everyone's turning their back on Trump, even Elon.
Yeah, no, Elon was posting Milton Friedman clips. He was posting Milton Friedman advocating for free trade to X, which is interesting because that's so directly contrary. The social media, I freaking love the way X and Truth Social play into social media. Am I the only one who thinks it's hilarious? We have the literal president of the United States reposting memes and TikToks to his account. Literally, his Truth Social is 20 or 30 random posts of random things like "Make America Great Again," "Thank you to these people supported me," general stuff. Yeah. And then out of nowhere, we're tariffing China 20%. And so the poor traders out there are looking at True Social all day, all of his propaganda, or all of his just general posts of whatever. And then out of nowhere, big, really important news about the market that you have to know immediately that moves markets. Because I wanted to follow his Truth Social so I could know exactly when he's posting these really big things. But then all of a sudden, I'm getting 30 posts a day of random things.
Random stuff. And you're stuff. Why should I pay attention to this? And then you miss the actual important news.
Well, it's I'm just busy. I can't check every single post he does. If I was sitting there on the trading floor pulled up on one of my screens, that's what they used to do in 2020. Yeah, that'd be fine. But no, it's just funny because it's just all this random stuff. And then all of a sudden, super important news. And then he's No, he reposted a TikTok too. I heard this from
on Truth Social.
Yeah, he reposted something like that. This is what I heard. You know, you can fact check me on this. The guy who I heard it from seems to be trustworthy.
Okay.
I assume he's not lying, but he could be. But I heard that TikTok was saying that Donald Trump is going to crash the U.S. economy, so the Fed would cut rates. And this is like a classic conspiracy theory that people
really
are.
Classic conspiracy theory.
You listen to like someone online, they're like, "Look, I don't want to get too conspiratorial for a second, but I think that Trump might be trying to crash the economy on purpose." So this TikTok said about this, how Trump's doing this. Trump literally reposted it to his True Social. So he's literally admitting to this, that he's intentionally trying to crash the economy to get rates down, to to get rates down, so it would make him. So then we have lower rates that benefit people with their stuff.
Yeah. But that's crazy, though. Like, it seems like every other index is so reactive to, like, these type of headlines.
Yeah, of course.
And it's, like, definitely not anything on foundations, even.
This is all based on fundamentals. If anything, it's the retail crowd that's not based on fundamentals. Because the retail crowd are a bunch of these people who have one thought. Market goes up, stays going up, it doesn't go up. If it dips, buy the dip. See those memes recently?
Yeah,
a lot of them lately. When you buy
the
dip, but the dip keeps on dipping. Bought the dip 5 times this week and it dips again. Bro's calling me, buy the dip, dude, just buy the dip. I did 5 times. That's what the retail guys love to do, because the retail guys aren't looking into the fundamentals and the economics behind it on how our economy is in a lot of jeopardy.
Yeah.
Like, we dipped down, right? The markets went down. But, like, this is a good, healthy correction, and it makes sense. We're not dipping down for no reason. So this is based on fundamentals. You know, I am buying the dip. I bought the dip so many times.
Yeah.
And I'm finally starting to make money on my NVIDIA, because my other positions got stopped out on because I bought the dip too soon. But I probably shouldn't have, because this is... it dipped down, but honestly, should have dipped down. The market was priced too high as it was before. These tariffs aren't good for the economy. It makes sense.
Yeah, it makes sense. And also, people are saying that there's like a group of people out there who are saying that this is recession pricing in.
Yeah, the recession stuff's fun. I think we've been in a recession since 2008. Just kidding. We've been in a recession since 1776. I think our economy's in recession the last 250 years. Yeah, I believe since the year 5000 BC we've been in a recession. I don't think we've had any economic growth whatsoever. You're one of those guys who's bearish in the year 1400 BC. Guys, I think we've hit the peak. I think there's a recession incoming. Be a perma bear or something like that. No. I saw some post, some Bloomberg headline. Again, I should be opening these articles. This dude was like, yeah, I think that half the CEOs out there say that we're in a recession. It may have been Larry Fink. I don't know who this dude was. But it was a whole idea that half the CEOs are like, yeah, we're in a recession right now. So there's the whole argument that we already are in a recession. Because remember, the people who like score whether they're in a recession or not, they take like a year to get around to it. Like it's a delayed indicator. We won't know that we're in a recession until a year after the recession begins, or something along those lines. So we could be in a recession already. I mean, I think forecasted GDP growth is like pretty bad for next quarter. So yeah, you're asking about a recession. We could already be in a recession.
Yeah, it's like the perfect disaster right now. Like, oil prices are so low.
Oh, they are plummeting.
Yeah, so...
I mean, talk about lower inflation, though. Oil prices are lower. Yields are lowering. I mean...
Everything's, like, adding up to make the perfect worst combination ever. Have you been looking at gold lately?
Yeah, gold's fun. Gold's fun because it goes up, and then it goes up again, and then it doesn't stop going up. And, like, literally, it has had almost no pullbacks in the last 6 months. I mean, it's had a few, obviously. But it's still just up and up and up and up. And I have messed up my timing on gold so badly as well, where it's like, if I just bought it and held it this entire time, I would have made money. But instead, I'm trying to time it a little bit too closely. I'm going to buy here, sell here, because I'm trying to learn to trade and get better at it. I'm not, like, terribly consistently profitable. I'm making progress, though. I'm learning a lot.
That's what matters.
This has been mostly a learning experience for me. I'm not going to make the same mistake again next time.
That's what matters, actually.
I need to focus on really long-term holding, like the next over several months, instead of a monthly basis or weekly basis instead of a daily. But to answer your question, because I do this a lot, I end up going off topic and like bantering about my own personal opinions and thoughts on trades. To answer your question, yeah, no, gold's fun because everything's dipping. Gold hasn't been dipping as much as everything else has. This was before the tariffs too, where the S&P would dip. Gold's staying pretty strong. Meanwhile, the S&P dips on tariff concerns. So does gold. Mm-hmm. And gold's always fun because I think like what I heard in 2008 is when 2008 started, gold dipped with all the indices and stuff like that. Like when there's a recession,
Oh.
here's what happens typically, right? This is what my understanding is that when there is a recession, that gold will dip with everything else, or whenever there's an economy crash, or whenever the market crashes. And that's because people are leveraged long gold. They're trading gold. There's a big risk-off sentiment. People will sell everything, sell the stock, sell their gold because they're over-leveraged. And then after that initial phase passes by, gold recovers pretty quickly. And then it goes even higher than the indices. Yeah, it recovers quickly because gold's safe haven asset. That's where safe store value. And so when there's economic turmoil, gold ultimately does well in the long run. But it may see an initial sell-off right away.
Yeah.
Which is what we're seeing with the tariffs, right? But I'm bullish on gold right now, way more so than indices, because I'm seeing it dip from the tariffs. But if there's economic turmoil, if our economy's screwed, we're going to see more people buying gold, not less. And Bitcoin is so, oh my gosh, Bitcoin, what the heck? Unbelievable. It is this. I am blown away by Bitcoin's price action this last week. Because the thing about Bitcoin is fundamentally, the Austrian economists love it. The whole idea behind it is that it is like gold, but better. It's digital gold, can't be duplicated. You can send it digitally. It's super hard to, or it's a super safe way to store your money. All those classic arguments, blah, blah, blah. What's funny about it is the whole idea behind it is like, okay, from day one, people love Bitcoin because it's a safe haven asset. Mm-hmm. That's the theory behind it. Like it's supposed to be like gold, where it's stable money, unlike the dollar that's getting inflated away. So that's why people liked it from day one originally. But it has never actually acted like a safe haven asset until slightly recently. So, right? Because this entire time, it doesn't treat it like a safe haven asset. It's like speculative asset. Speculative asset of the future of currency. It's like if you were to buy a stock into the future of currency. That's Bitcoin.
Yeah.
People who are like, Bitcoin's the future of currency. I'm going to buy some Bitcoin. And as a result, it is traded entirely like a speculative asset over these last 10 years. Where you see the market's up 10%, Bitcoin's up 20%, 30%. And it's crazy. But with that comes, when the market's down 10%, Bitcoin's down 30%. It crashes in value. It loses a ton of value. And that's not what you want to see in a safe haven asset. That's exactly not a safe haven asset. It's not safe haven at all. Even though fundamentally, people argue that it is. That it's a stable currency that can't be manipulated the way that the dollar can. So it's not actually traded like a safe haven asset. I speak too fast. It's not being traded like a safe haven asset. But then, get this, we have the tariffs concerns. Now, the market crashes. It's down 5% a day, 5% the next day. I go Sunday night looking at futures market. I'm like, oh, I'm sure it's fine. Down another 5%.
Oh my God.
I know. Sunday night, I'm like, what the frick? Like, it's just blowing my mind how much it's going down. But Bitcoin, you know what Bitcoin's doing?
What?
It's down a little bit.
Mm-hmm.
Not nearly as badly as the indices. It's not nearly as bad. It's not nearly what you would have expected of Bitcoin speculative asset. Meaning that people are starting to recognize it as somewhat, slightly, as safe haven asset.
Yeah.
They're not being so speculative as they used to be.
Yeah.
They're like, okay, market's going down, but it's trading in closer. The price action is more closely reflecting that of a safe haven asset, which is so fascinating. And I know you were asking me about gold and going on Bitcoin now, but they're so closely related.
They're so close related. Yeah.
It could also just be because people actually believe that the Trump guys are gonna buy Bitcoin for the Federal Reserve, for the Bitcoin Reserve, and therefore there's a fundamental value of Bitcoin that's in its current price range and it'd be fundamentally undervalued if it were to go down. So maybe it's not because it's being recognized as an asset and more so just other fundamentals that conflict with it. But this is something that I find so interesting because I think in 10 years from now, 20 years from now, there's a possibility where Bitcoin actually does trade more like gold as a safe haven asset and not like NVIDIA as a speculative asset.
Also, I mean, going back to gold, you were saying that it could drop in price eventually for this time. Or do you think there's room for growth still?
Well, you have an economic turmoil.
Yeah.
People is a massive unleveraging. Gold drops in price. But long-term economic instability is, I believe, positive for gold.
Okay.
And, same thing. If you have a lot of these, gold's a safe haven asset. And so I'm not terribly concerned about gold's price overall if we were to enter a long-term economic. Well, I need to think about this because I don't know. I should cut this out. My understanding is that a crash in markets or whatever is bad for gold in the short term. But in the long term, gold's safe haven asset. And as a result, it's not going to lose value as much as an index would, or an index would, or an equity would during a long-term economic contraction.
Got it.
Yeah.
That makes sense. Yeah. Switching gears, but still in the chaos that we have right now. It's oil prices.
Oil prices.
They're so low right now.
Are they low?
They are low.
What's the last
Wait, can we check that, Katie?
Dude, I'm so bad on oil. I'm trading oil, Sophia, and I lost so much money trying to, because I didn't know anything about it.
Down 3.8% today.
So what's the spot rate?
Like $58.
58. That's low.
58.4.
58.4.
Yeah.
That's low.
Permian producers. I don't know if you've heard of them, but just they're big producers, and they are even trying to cut on their production because it's too low. It's not even making revenue.
Yeah, I get that.
Yeah, that's crazy. You were also talking about like Nvidia.
Yeah.
So what are you looking at?
Yeah.
Why are you looking at it? Like,
we were talking about Nvidia right before this. We had the best conversation too, and it did not yet record it because we were just bantering. I'm like, we should be recording right now, Sophia. So we started recording. No, I bought Nvidia Sunday night in like after hours pre-market, whatever Robinhood lets me do on Sunday night at 6 p.m. This is what I'm doing on a Sunday night at like, actually it was like more like 10 p.m. No, it was like 11 p.m. at night.
on Sunday.
No, this is what I'm doing at 11:30 p.m. I'm going to sleep. No, I'm checking Nvidia stock, obviously, because I've got to be locked in on maximizing shareholder value.
Period.
Where I'm the shareholder.
Period.
And Jensen Huang is working to make me rich. Me and my 20 shares in Nvidia. Actually, I got more than 20. I got like, I'm getting an exact number for you guys. 83 shares.
83 shares.
I borrowed money from my dad to buy Nvidia, and then I used that money as collateral to go out on margin to buy even more Nvidia. So as a result, I'm super leveraged on Nvidia, and I love the stock. I bought in at $84 a share, like Sunday night or something like that. I bought in on Friday as well, and I bought in for like a worse price. I'm going to talk about that price because, but I am up on Nvidia. It's going back down again. I'm still up, but it's going back down again, which sucks. It sucks. But no, okay. Nvidia is fun. I love Nvidia. I had to research them for the GW Investment Institute.
Did you pitch it?
I pitched it. I won too. I won the best pitch as well.
There we go.
For the portfolio group they have. And I got to speak at a conference as well about it.
Yeah.
So I was locked in on Nvidia.
He was locked in.
And they are such a fun company because I bought into them too when I'm like 2018. I didn't hold for that long because I'm not like, I was 14 and I was also kind of stupid. So I saw Nvidia up 30%. And I'm like, Nvidia's up 30% in the last 2 months? There's no way, or no, 6 months. There's no way it could go up any more than 30%. I should sell before because I don't want it to go back down. Meanwhile, it's like 10x since then. Like, no, but I like Nvidia. Their management's amazing. Jensen Huang is the GOAT. He's got 40 direct reports, which I look up to. I got 10 right now of SPMC. I got all you reporting to me. He's got 40 though. I got to get on Jensen Huang's level.
We need more people.
Yeah,
guys, show up to the SPMC meetings.
We need. Yeah, I need to like grow our organization to outpace Nvidia's. No, he's got 40 direct reports. He's super cool guy. He's so sweet too. I love the guy.
Yeah, he's so down to earth.
Yeah, and he speaks so highly of people too. He's like, I love this guy at this company and this guy at that company. So I have, it's faith in management. But okay, beyond that, their margins are insane. Like they blow my mind. Over 50% margins, like gross and I think net. I didn't know the exact numbers. I have it on my slides. But like I think 75% gross margins and the net was like 50, 60 something. Unbelievable margins. Their economic moat their moat overall compared to the competitors is great. Their products are so much better than all their competitors, and they keep on investing in R&D to keep that moat. Their assets, holy crap, $130 billion in assets or something like that. And then I think like their liabilities are like a quarter of that. And their current, like they can pay off their total liabilities like 2.5 times over with just their current assets. There is no risk whatsoever of this company having, well, not no risk, but there's little risk of them having significant balance sheet trouble. People are lining up to buy their graphics cards,
Yeah.
It's just, and it depends on your analysis too, if you do DCF and how you value it and what rates, because the big issue of NVIDIA is just the valuation. So when actually you see it trading at a better valuation, I see it at $84 a share, I'm like, there's no way a year from now it's still trading this low. Even if we enter a recession, I'm like, okay, eventually it's going to recover to above 84. So I bought into it. That's the thing that's going well for me. But again, I'm buying the dip on the market, and it's risky because the market could just keep on dipping and not stop dipping. So that maybe I should sell right now. It's like I was up massively. I was up like probably 10% on my position, which is a fair amount. No, 20%, I think. Yeah, I was up 20% before my exam this morning. And I look at it, I'm like, I'm up 20% right now. This is a lot of money. Should I sell? And I'm like, nah, I gotta take an exam right now. I'm gonna worry about that later. So I took the exam, forgot about NVIDIA for an hour, to be honest. And then I'm like, oh yeah, I forgot I'm in NVIDIA stock right now. I check it. I'm now only up like 15+%. I'm like, okay, I'm up less now. Now I can't sell. I mean, less from before my exam. I'm joking. That's not good trading philosophy. But no, I've been holding this whole time because I do like NVIDIA overall. And when I saw it at 105 or 110, I'm like, yeah, I still like this stock.
Yeah.
Sorry, I just spent the last 5 minutes talking about my trade in NVIDIA.
That is okay because we need to get fresh thoughts on it. Really? Yeah.
It's also time sensitive too. I'm talking about like daily movement in NVIDIA.
Yeah,
it's like
because
this is coming out on Thursday night.
Thursday night. And today's Tuesday.
It'll probably be broke by the time that it's Thursday night because NVIDIA is going to crash in value and I'm going to get margin called on Robinhood. My dad's going to margin call me. Dude, you got to stop borrowing my money.
We need to ask for more sponsors.
I know. I have to negotiate him too to try and get a lower interest rate. I'm like, it's like, how much interest am I charging you again? I'm like, oh, interest? You told me 0%.
I thought family didn't have interest. I know.
So I'm trying to get a 0% interest rate out of my dad. But he's remembering, like, I asked him, right, too, about the interest rate stuff. Like, I don't think you should charge any interest to me. It was like late at night. He was drinking a glass of wine. He was pretty relaxed. I'm like, yeah. He's like, yeah, whatever. Moment. Yeah. And then like a couple weeks later, he's like, yeah, so how much am I charging you in interest again? I'm like, 0%. I don't see a problem with this. Actually, should we talk? He's watching my podcast too, so he's going to be watching this and he's going to hear this. He's going to remember. So it's fine. It's fine.
It's fine. We just have to be more. We have to be hopeful of the upcoming days, and especially when tariffs actually take place.
I know. You see that rumor? There's a rumor, and it was like. Some random guy with 600 followers on X posted, yeah, the tariff's getting delayed by 90 days.
Oh,
some other guy.
That's what I was going to ask you about. Yeah. Like $4 trillion switch.
Like, I know. And some dude reposted it. It went viral. The traders out there trying to get an edge or trading off of it. S&P's up 7%.
Yeah.
Then reverses in value. I don't even think it actually gave up all of its gains, too. It went up 7% and then it went down like 3 or 4 or 5%. I don't know the exact timeline on it. Oh. But, dude, this one tweet by some random dude, 600 followers, is moving trillions of dollars in global markets.
Even the White House had to like come out and say, those are fake news.
I know. Really do care. But the reality is, people are making a bigger deal out of this than I think they really should be.
Yeah.
I think the reality is I'm invested in equities and I am not phased by it. I don't even care. I'm not phased because I'm like, this happens in equities markets. If I was afraid of a 20% decline in equities markets, then I shouldn't have been in equities markets in the first place. I mean, Wall Street and equities markets and all these other markets too, they are important. They are extremely important. But they are different than the economy. Just because the stock market is going down 20% doesn't mean that the entire world's burning and falling apart. Like, oh my gosh, this is the end of the world. No, it's just a couple equities go down. They go down, they go up. Worst case scenario, we get into recession. I mean, that sucks. A lot of pain will come from that. But like, being in a recession is different than equities being down. They're not the same thing. And you got to look at it. The top 10% of the United States population holds 87% of the equities. So we see this huge wipeout in wealth. The people getting wiped out predominantly by this are the top 10% of the country.
Top 10?
Top 10%. They hold the majority of the equities. So there's a huge disconnect between who holds equities in the stock market and people who really are like struggling to get by.
Okay.
And so there's a disconnect between like the money held in equities and like, I don't know if that makes sense. Like,
no, it makes sense.
I listened to Scott Besson on Tucker Carlson because I think the one, like, he did an interview with Tucker, the exact, like, right as all this drama's going down. And you can think what you want about Tucker and about Scott Besson, but the reality is Scott Besson's incredibly influential in what's going on right now. This is the big interview that he's doing right now, so I'm listening to it now, and he was talking about those exact statistics. And his logic behind this was like, yeah, I care more about Main Street than Wall Street, and I'm willing to put Wall Street through a little bit of pain if it means that people in Main Street are doing better off. And his argument was, I think, the Trump administration, it's down 4% at the time, probably more than that now, since Trump got into office, and that 4% loss is suffered by the top 10%, but that the bottom 50% of the population, their wealth is up 10% or something like that since Trump won, or something along those lines. So his argument is he's affecting wealth inequality. He's trying to, take these policies to help the mainstream economy or the bottom 50% of Americans, even if it hurts the top 10%. With that said, that's what he said. That was his argument. There are, it's not a perfect argument. I mean, part of the argument is it's arguing that tariffs, in fact, will help about 50% of Americans.
Yeah.
But it will also make it more expensive for them to buy their stuff. And he was going into the math behind it, like, okay, so part of the tariff's paid by the consumer, part of it's adjusted through FX, part of it is paid by the exporter. And there's all this complicated tariff math that is confusing, and I need to sit down, put my headphones on for a couple days straight, and just research the heck out of it, which I can't do when I have a corporate finance exam this morning, an accounting exam last Tuesday. I got a couple finals upcoming, a couple projects to worry about, and all I want to do is sit and read about the Argentinian economy. The Argentinian economy is so fascinating. Yeah. I want to read about the El Salvadorian economy.
Wait, you should ask me.
You know about Argentinian economy?
El Salvador, I do know.
Yeah, no, I want to read about these emerging markets and these economies, but I got to focus on. Well, I got to learn about tariffs first of all. But when I finish my last final, first thing I do, I'll be locked in on emerging markets.
But we just have to be hopeful. For our audience, thank you so much for listening. Please go subscribe to our YouTube channel. Please leave some comments and follow us on social media. And I'll see you next week.
The Midnight Markets podcast by the GWU Stock and Portfolio Management Club features student discussions on finance and market trends. This content is informational only, not professional advice.